G'day guys, and welcome to the weekly VEMA Trader Market Scans. My name is Rhys, and today we're running you through my thoughts on Bitcoin for the week. So what we'll do is we'll go and take a look at the trades that we set up last week, and we'll see how those have played out. Then we'll take a look at Bitcoin as it stands today. We'll do our analysis on the chart, and if there's any trades that we like to look of, we'll set those up. I'll also showcase a brand new feature that our dev Sif has been hard at work on that massively speeds up the charting process and makes it a whole lot easier to visualize your trades. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so we can see immediately that none of the trades we set up last week have entered. They're all still in this blue monitoring state. I'll take a look at these three trades at once, the same as I did last week, because they're all quite similar trades, and that is the shorts from Alpha, Bravo, and Charlie. Now, I quite still like these levels, right? I'm quite happy to be getting to shorts from these levels, so I'm going to leave all three of these trades running. I'm not sure whether Bitcoin will retrace back up to there and get me into these shorts, but because my daily bias is still bearish, I am still bearish on the market, I really want to be looking for minimum risk, maximum opportunity positions to be getting into shorts. And in my opinion, these three levels are absolutely fantastic places to be getting into a short in the hope that the market continues down from there. So quite happy to leave these three trades running. The other trade that we set up last week was the breakdown of the range that we were trading in. We're still in that range. So we've actually held this range for a really long time, which is interesting to see. So what we were looking for was a candle close below this delta trend line. Now, you can see how the candle close feature is such a handy feature because it actually saved me from a losing trade here. If I'd used a traditional sell stop, which is what you have access to on the exchanges, I would have been caught out on this wick, I would have been entered into my short, and then I would have almost got stopped on this candle. I would have now been stopped out on the current candle. Because I can use the candle close feature, and VEMA will only enter me if we get a candle close below delta, I haven't entered that position. VEMA's just sat and monitored, and even though we wicked down here and we wicked down there and we touched it beautifully there, VEMA has not entered me into that position because my entry conditions haven't been met. So I've been saved from a losing trade, which is really, really handy. But I still do like that level. Until we make a higher high, I really still see us as being in this range. And I still think that if we do get a close below this level, that's going to be the breakdown of this range. And the breakdown of this range, I do think, will lead to potentially a very swift drop in the market to somewhere around that 24k level. So I still really like this short. I actually am very surprised this short hasn't entered because all through sort of here, I was like, right, this market is looking bad. We're going to get the close below soon. We're going to get the close below soon. Didn't happen, but I still quite like the look of this trade. So I'm going to leave this one running as well. Now we're going to take a look at Bitcoin as it stands today, and we'll see what we can see. Righto, so I thought I'd actually do something a little bit different today. I'm currently looking at the Brave New Coin Liquid Index. So for anyone who doesn't know, this is one of the oldest Bitcoin charts, or certainly one of the Bitcoin charts that has the most past data. It goes right back to July of 2010. So we're looking at 12 years of Bitcoin history here, and what I wanted to point out is that we are potentially about to form the first ever lower low on the monthly chart. So as always, market structure is a little bit subjective. It depends how you view it. But for me, I would see that as a higher high, that as a higher low, that as a higher high. And now we're potentially about to break that recent low, which has either never been done before or been done once before, depending on how you look at it, back in April of 2014. So to me, I kind of see that as just a straight move. And you could certainly say the same for this. You could say that that is the move. So we're actually going to form a higher low. Definitely an argument for it. But just something that I picked up this morning when I started looking at the charts. Now, there is still 23 hours until the monthly close happens, so this may change. But I would be surprised to see a buy up. That's a over 20% move in 23 hours. Certainly not out of the question, but just based on how Bitcoin's been behaving, I would be quite surprised to see it. So, what does that mean for Bitcoin? Who knows? But I wouldn't consider that a bullish signal if we were to close lower than 35k and break these lows on the monthly. It could be a fake out, right? We could just come straight back up next month and close above, but something that's worth keeping an eye on and something that's worth having a think about. If we do get that close below 35, where are we heading? And here we are on the weekly. So the weekly at the moment is still looking quite bad in my opinion. I've marked off that monthly point of interest just to keep an eye on that at 35,000. Last week's weekly candle was kind of a bull hammer. You know, we did push down, push back up, but we still closed lower than what we opened at. And it's not a huge wick to the downside like it was 2 weeks ago. So not really a good sign for Bitcoin in my opinion. As I've said each week for the last couple of weeks, as something comes down, you do sort of expect to see a retracement at some point. But the longer we sit at this bottom without pushing up, the the more I start to think, okay, the downside is more likely to be where we head from this level than the upside. So currently on the weekly, I am still probably more inclined towards the downside than the upside. Certainly, it's not impossible to head to the upside, but that is kind of the feeling I'm getting at the moment looking at this. I'm just not seeing buyers stepping in. It just doesn't seem to be happening. So I start to expect selling pressure to take over at some point. On the dailies, there's not a whole lot for me to talk about at the moment. The only thing that I think is really important to note is how compressed, how tight the ranges that Bitcoin's been channeling in for the last, I think, about 3 weeks. 21 days, yeah. So for the last 3 weeks, right? If we ignore those weeks, which, is not super scientific, but we're looking at about a $2,500 range that we've sat in for 3 weeks, which is really, really tight and constricted for Bitcoin. And when ranges like this tend to break, the tighter it is, the more volatile the move out of it tends to be. And the longer that it goes on, the more volatile as well. I'll talk about that I'll talk about why that happens on the 4 hour a little bit more because it's sort of easy to see there. But that's really the only thing that I have to note on the daily at the moment is that I see a pretty constricted range, and that makes me think the breakout will potentially be quite volatile. Righto, so here we are on the 4 hour where the action happens. And like I said on the daily, we are in quite a constricted zone. It's even more visible on the 4 hour. You can see that we're in sort of a $2,000 range, and we've sat there for 3 weeks or 2.5. If you don't want to include these sort of fake outs and the sell off that put us into the range. So I'll talk a bit in a second about why I think it could be a really volatile break when we do break this range. But first off, I'll just talk about the trades that I'm actually looking at. So the short from Delta, we've already got that one set up. The candle closed short. I still quite like the look of that trade, as I said just before. The other trade that I'm considering for this week would be to catch a retest. So if we do break that $30,700 level, potentially come up to $31,600, I would look for setting up a long bounce from $30,700. I would most likely add conditions to this trade. I would most likely have the confirmation distance on because I am quite unsure on the market at the moment. My daily bias is still bearish, which means that I don't really want to be going long, but I do trade against the market at times. I really like this $30,700 level, right? I showed you guys last week. I think it's been relevant from May of 21. So for a full year, that's been a pretty key level, and you can see how well it's held in this range, right? It is essentially defining the range. So I do think if we break up, there's a good chance it holds, but I don't trust it enough to just put a long sitting and waiting there. I really would want to see some confirmation we've bounced from there before I enter that trade. So I'll use the distance to confirm and the candle close conditions to really make sure that happens. That is if we get up to 31,000. We may never get there. Now, 31,000 I also spoke about last week. Also a key level from a long time back, and it lines up with the supply zone that's currently controlled that has been retested here and there. So it is possible we rocket straight through that. I'll talk a bit about that in a second, but I would kind of expect to see sellers stepping in there at least somewhat, hopefully give us that retest. It may just reject straight back down. We may see a fake out of this range. Why I think things could be so volatile if we break, right? So often you'll hear me say, well, not often because we're not in a range all that often, but when we are in a range, you'll hear me say the longer we sit in it and the tighter the range, the more volatile the breakout is likely to be. So I'm going to go through why that is now. One of the big reasons for that is liquidity. So for anyone who doesn't know, market makers, in terms of institutions, big hedge funds, even just whales, people with a ton of money, they can't just trade the way that you and I trade because they have so much money, right? It's a really good problem to have. I'll hopefully have it one day soon, but it is a problem for them when they want to make more money. The problem that they have is if they were to just buy the market as they can, they would push price up. They would really impact the market and change their own average entry because there wouldn't be the sell liquidity that they need to match their buys. One way that they can get around that is to go looking for where there is potentially sell liquidity. Now, a really good spot to find sell liquidity is by stop losses. So there was a lot of longs being put on through here and potentially even here, right? There was potentially people with longs sitting and waiting when price came down. All those longs, all the best of those longs for people that were trading correctly and were using stop losses, not everyone would have been, would likely have had their stop losses somewhere in here. What those stop losses are sell orders. So what does a sell order give the market makers an opportunity to do, it gives them an opportunity to buy, because for every buyer, there has to be a seller. So if you have a whole lot of stop losses sitting in this range, and you want to buy a ton of Bitcoin, and you can't just buy your Bitcoin because you'll push the market up, what you can do is push the market down, because you have the money to do so, into all those stop losses. Once those stop losses get triggered, that is a whole lot of sells that start trying to push the market down that you can load your buys up into and pick them up. So we potentially saw that happen with this wick. That's potentially what that wick was. Sorry, that drawing tool gets me every time. Was market makers pushing price out of the range to find that liquidity. Now, one way to sort of check and see whether that actually holds up is to look at the volume. So, little pro tip for anyone charting with VEMA: if you want to use indicators but you don't want to have them on all the time, you can just add them and then double click to get them to come and go. So I've got volume set up. I've got it set up as its own little channel at the moment. You can see that the highest volume for the last week, probably nearly over the last 2 weeks, last 2.5 weeks, was on this push outside the range. So potentially that was a lot of buy orders getting filled down here with the stop losses of all those longs. Now, market makers do like to play the market both ways a lot of the time. So there is also potentially a ton of shorts already on, and they may go looking to load more shorts. You can see that through here, there was a lot of sell volume, right? That's the highest volume that we've seen in the last, what are we looking at, May. So in the entire month. And also here, there was a big amount of sell volume. So there was also a lot of buy volume here. So that was potentially, not all volume is market makers, but a lot of the time, big bits of volume will potentially be them. So they may be doing the same thing on the other side. So a whole lot of short orders through here means there's potentially a whole lot of short stop losses through here. Now, a short stop loss is a buy order, which means that market makers have the opportunity to sell into that stop loss. So if they were to push price up, there's going to be a whole lot of buy orders happening through here that gives the market makers the opportunity to get a whole lot of sell orders or shorts on in that range. What that potentially means is that we may see a break, right? And when we see that break, it's potentially going to be very volatile, because if the market makers have taken out all the liquidity up there, it means that there's not a whole lot left holding the market up. So if we keep looking at the downside, let's say that the market makers got all the buys on that they wanted to have from here, and they've also loaded up a ton of shorts from the top. So now they don't care where the market goes because they're hedged. They're in a really good position. Let's pretend that you're short from here and you're long from here. You have essentially made 8%, whichever way the market goes, because you're already in both those positions. You've got an 8% gap before you start having to, you don't even start losing money, because as the market goes down, you're losing on your long, you're winning on your short. So you are in a really good position if you are hedged in that way, because you have a massive buffer in the middle of profit. If there is a ton of shorts on from up the top, and the market makers have got all their buys filled and they're happy to let the market go whichever way it wants to go now, there's potentially not really any buys sitting down here anymore, right? Potentially. The market makers could still be trying to get buys on there. This is all quite speculative. But if there's not buys down there anymore and price does get pushed through here, what that means is all that's left is the stop losses of these longs, and that's kind of it, right? And so if those stop losses get hit, the orders down here, what that does is it pushes price down, because those are sells that now don't have the market maker liquidity to sell into. It doesn't have that buying pressure holding it up, and so it potentially pushes the market down really fast, really hard. Now, the second thing that happens when people see that, I'll get rid of a couple of those lines. Let's say price has been pushed down to here. Second thing that happens when people see that is people go, oh, finally the range has broken. I'm shorting. The range has made its decision, or the Bitcoin's made its decision. I'm shorting because the range has broken to the downside. I'm shorting. That's extra selling pressure that pushes price down. Then you also have people that FOMO, or the reverse in this case, sell their bags. They go, oh no, Bitcoin's tanking. It's lost 30,000. It's holding it for so long. It's lost 30,000. Kind of like a stop loss, right? Same thing again, but more psychological. They didn't necessarily have an actual stop loss order on the exchange, and then they start dumping their bags. More sell pressure, more sell pressure. Now, if you're like me, you don't really have a reason to buy until about 24,000. When I look at the chart, I don't really see any reason to buy all through this range, right? There's really no market structure there. Bitcoin went up pretty fast through that range when it was there in 21 or whenever it did break that 20k level, and it ran quite fast. So there's not a whole lot of reasons to be buying in that area. It's kind of just a random price point, right? 25,000 is a significant number. So we did see some buying from there at this point. I think there was a zone at about 26,000, but we whipped through that, so I don't have that anymore. So if there's not a whole lot of reasons to buy through here, there's potentially not going to be a whole lot of buy orders, which means that all that sell volume that we we're just talking about will just tank the market. Now, I'm not saying we'll see it happen in one candle or two candles, right? It still could take some time, but it is all those things sort of just add up and make me think, okay, if this range does break, especially to the downside, I'll talk about the upside in a second, but especially to the downside, I think it could be quite a swift move to 24,000. On the upside, it's a little bit different because there is that $31,000 level, but in terms of the liquidity, it's exactly the same, right? Spoke about all these shorts through there, so there's potentially a whole lot of buy liquidity through there, which means that buy liquidity in the form of the stop loss of those shorts, market makers can get their shorts on. But if they're not looking to get shorts on, all those stop losses are buys. All those stop losses push the price up, then people go, the range is broken, I'm getting in, and they push the price up further. So I do think when the range breaks, it's potentially going to be quite violent. That retest is kind of my least violent scenario, right? It wouldn't surprise me to see a really volatile move, especially to the downside. Now, why do I say all that? Because it's something you have to prepare for. It's something you have to be considering. In your trading, you want to have some idea of what you think is going to happen on the bigger picture and plan accordingly. Now, the other thing that I forgot to mention is that's the liquidity side of why I think it could be a volatile move. The other side is just the pure psychology side. People get bored. When Bitcoin does nothing, as it has for the last 2 weeks, if you're a range trader, you've probably made bank. It's been a fantastic range to trade. Not my cup of tea, so I really haven't been doing it, but anyone who is a range trader has probably been cleaning up over the last 3 weeks. For the rest of us, people get bored, people get antsy, people want to trade. It's a really common thing. And so once you see that range break, you'll potentially see a lot of people FOMO. FOMO is maybe not the right word, but a lot of people just get into trades because it's like relief, right? Finally, the market's doing something. Finally, I can trade. Finally, I can do something. So even ignoring the liquidity side of that, there is a whole psychological side of that can really drive the market hard and fast. So those are the things that I'm really looking at on the 4 hour. In terms of the trade, there's really just that short. That's the trade that I'm most keen on, the close below delta. The retest, I will potentially set up. I'll post in the Discord if I do set that up because there'll be quite a few considerations around that trade. Now, last but certainly not least, I did promise you guys a look at WSIF's very, very cool improvements to VEMA Trader. So you will see this happen whenever you are creating trades from now on. So let's say that I'm setting up a short because I've got my 4 hour level, I've got my trend line, I want to be getting into a bounce short from this level. Once I select bounce, you will see that a stop loss and a take profit appear on the chart. Now, these should look familiar because they look exactly like the ones in our monitoring screen that are draggable, because they are. You can now move your stop loss and your take profit on the chart, and what you'll see is that by doing so, I'm actually changing the fixed values in my risk management. So if I want my stop loss up here, I can simply drag it there. I don't have to put the mouse above the wicks, go, okay, that's 2095, and then come over to the value over here and type it in. I can simply drag my stop loss to there. I can simply drag my take profit to here, and VEMA will automatically update based on those. If I wanted to do it the other way, I could go, okay, 2173 to 2173, and VEMA will move my stop loss for me. So this massively, massively speeds up the charting process, in my opinion. It has made things so much simpler, and it's also really handy because it visualizes exactly where my stop loss is going to be. As someone who always uses market structure or zones for my stop loss, now I literally just have to look, okay, is my stop loss above that wick? Just here? Yep, then cool. My stop loss is in the right spot. I don't even care what the value is. And so this saves me a ton of time and just makes that trading a whole lot easier. So a big shout out to WSIF. This is one of the first big features that he has worked on, and it is an absolute killer. So that's it from me for today, guys. Hopefully you have a great week. Hopefully you got something out of that video. I know it was quite long. I know it's probably a little bit more educational than what I normally do, but I do think it's really important to consider what could happen if we break this range, because we are in this range. It's worth thinking about what's going to happen in the future. So have a great day, happy trading, and I'll talk to you guys very soon.